But one stock which has been in focus as well is InterGlobe Aviation. Several tailwinds continue to drive the stock to new highs. What's working for the stock, and could rising competition spoil the party? Someone breaks it down for us.
Well, for the first time since 2019, the first half of the calendar year has been the best year for IndiGo. Nearly 26% returns so far in the first half of 2023. Now, last time we saw something like this was before COVID, 34% return in 2019. So what is leading this rally for IndiGo in 2023? Firstly, it's the dominance that IndiGo's dominance that has been continuously increasing. Now, this has also been aided because of Go First shutdown and because of some fleet issues that we have been seeing within SpiceJet. And if you see on the dominance factor, IndiGo's market share has now increased to more than 60%. Also, given the fact that Q1 is a seasonally strong quarter, yields have increased sequentially. Analysts are expecting at least a 10% growth on the yield front, also because of the Go First shutdown. Along with this, the cost are also very much stable for the company on a sequential basis. Fuel prices have come off, while INR, that is Indian currency, has remained pretty much stable, which means that the cost could also be on the lower side for IndiGo in the first quarter of FY23. Now, also the air traffic has been increasing on a sequential basis and also on a month-on-month basis. Now, the daily air traffic so far in the first quarter of FY24 has increased nearly 3% on a Q-on-Q basis, while it has increased nearly 20% on a YOY basis. Also, the company is focusing more on increasing the share of international airspace in their total capacity mix. Currently, it's at around 23%, and they aim to take this to around 30% over the next 2 years. Now, increasing focus on international space also means that their margins could be higher going forward. Also, among the airline space in India, if you see, IndiGo's balance sheet is the strongest. They have free of close to 12,200 crore rupees, and they also aim to double their fleet count by 2030 from 304. They aim to take it to over 600 over the next 7 years. Also, recently the company placed an order for around 500 aircraft, which would aid their fleet size beyond 2030 as well. Now, if you see, recently a couple of brokerages also came out with bullish note. Firstly, Investec, and second was UBS, and they both are expecting a blockbuster first quarter of FY24 earnings from IndiGo. In fact, UBS has gone ahead and said that the first quarter FY24 EPS could be 37% higher than the highest ever annual EPS that the company had reported in financial year 2018. So a full financial year EPS versus only first quarter EPS, and that too is expected to be 37% higher as per UBS. However, there are a couple of risk factors when it comes to IndiGo. The first one is the increasing competition. Now, Tata Group is looking to merge its airline operations, and that could be a big competition for IndiGo going ahead. And the second is an overhang, not much of a risk that we see, but Gangwal Group is looking to sell their stake, and they own around 29.7%, and the lock-in period ends in July, and they could sell stake up to $1 billion. That is what the street is expecting. So that could be one overhang on IndiGo share prices.
All right, then, well, the party for IndiGo is not over as yet, already given a return of a good 26% year to date. And